Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, March 29th. Good to be here with you guys this morning. Gary, Mike, good to see you. Asking what time will the beta signal webinar be held? Maybe you could share this once you go live. So we're scheduled for 1 o'clock. I'll update the homepage shortly after we're done here. But all else held constant, Mike, we're looking at 1 o'clock. Guys, we're going to just do a quick wrap-up of the signals. We'll go over the ins and outs of that, how you can turn those off and turn those on. And certainly for those who signed up for the beta version, it will be recorded. Absolutely, Michael, and we'll have that published for you shortly after. So encourage everyone to attend that if they can. On the docket for today, so we got Theresa May coming out and finally giving the Article 50 to the council. Certainly that was the main event. Here is the link. By the way, I've gone through and read the entire letter. It's really interesting, very cautionary stance. Here's the link in the message box, guys, if you want to read that letter. Yeah, Mike, no worries. We'll have that recorded for you and posted on the homepage for sure. But it was a very interesting letter, okay? And certainly we did see the pound come in, was looking for that little bit of a deeper drop, but you know, the topside bias, broadly speaking, still remains in play. So you didn't get that quite the drop into support, reverse just ahead, and now you got to really keep your eye on this near-term resistance range in the pound. So we'll go over that. On the menu for today, obviously we'll go a quick DXY review, SPX, S&P 500 with a really nice levels over the last couple of weeks. The sterling, obviously, dollar yen remains pretty much unchanged. Nice range just below resistance. Aussie yen, really nice move and a perfect touch of resistance last night. Euro Aus, and then we'll take a recap of some of the other trades that we've been following. Aussie Kiwi, Euro dollar, Euro yen, crude, and gold. Keep in mind, we do have crude inventories today at 10:30 Eastern in New York. All right, as always, if there are any other pairs or trade setups you'd like to review, feel free to drop them on the message board at any time. Here is what the dollar index looks like heading into the US Open. So we made it through 99.40, 99.50. We talked about this resistance zone yesterday. We've also now filled the uncovered Friday gap, which held as resistance basically into the close of trade last night. Asia Open, this thing plowed right through. So 100 spot 03 or 02 was it? 2015 high day close is basically what we're looking for as initial resistance. 100 spot 41 is really the key zone. I think you'd start to look again for some more rigid resistance, possible entry back on the short side. It's the underbelly of this 618 retracement from the advance off the lows here. So I don't really want to stress that. More so just this pivot in price. Swing lows and former parallel support, now resistance. Really nice swing highs here too. So think you could see a stretch higher. Levels remain unchanged and the game plan remains completely unchanged from yesterday's guys webinar, so I don't want to spend too much time on this. We talked about the risk for a pop higher here just on basis of the fact that we've been getting ongoing divergence into these lows. Keep in mind, this was an uncovered gap from back here in November. We finally just filled it before rebounding higher. So yeah, you know, you could see a little bit more upside here as we recover off of these lows, but largely speaking, you know, we're looking for more of a hold near that 100 spot 40, 100 spot 39 level. Questions on the dollar index before we move off? Okay. Excuse me. Number two, and she's a beauty, the SPX. Here's what the SPX looked like last night, and here's what it looks like now. You know, the main thing here is just the cleanliness of the current operative structure. Here's what the daily chart looked like. We've been following this one, whether we're working with this descending channel or this embedded pitchfork, both of them continue to highlight near-term resistance right here, okay? And basically that's at the monthly open, just shy of. So the daily chart's pretty clean. Here's what the 240-minute chart looks like. We even gave you a tweet yesterday as we were coming into this, finally tuned a little bit more. The levels literally caught that high perfectly, and you saw a pullback here. So look, this is the near-term bearish invalidation level. You have the monthly open just above it. I would need to see something northbound of 2370 to actually get bullish again. But largely speaking, you know, you're at a near-term pivot point in price, and you have to respect that 2363, 2361 region of resistance near term. Currently trading at 2355. Here's what the 120-minute chart looked like, 2-hour chart yesterday. You can see a perfect kiss and touch of that. Near-term support right at the weekly open. Here's what it looks like now. Okay, so we're still drifting a little bit lower. Again, at this point, you'd still be looking for that weekly open as near-term support. That's somewhere around 2350, 2348. Topside breach above this, 2370, still the last sort of ditch effort for a hold on the SPX. Just snap some of these levels for you. So you could see, let me zoom this out a little bit, the structure that we're coming off of. Just a sliding parallel, perfect touch right here. The upper parallel, the resistance barrier, converges on the monthly open. That's this barrier here. So the levels are super clean. And I suspect you'll get the topside break, to be quite frank, but until we do, you got to respect 2360, 2361 as resistance. Keep in mind, we're heading into the close of the month. Again, I'm going to keep stressing this. I'm super light on everything I'm getting involved in. Gary, absolutely, we're going to go over the abomination. That's next. But just keep in mind, again, and especially with the pound, once we go into some of the crosses, with the major event risk that's happening, you want to be a little bit more cautious heading into the end of the month. So SPX coming into near-term resistance to start off the day. Keep in mind, as I said, one last thing is that this is an exact 100% extension off the lows. So if this is a correctionary rebound, that's exactly where you'd want to see hold. So at risk below 2363. Okay, that's the threshold we really need to get through. Moving on. Number 2, any other questions on the SPX? Number 3 is going to be British pound, and then we'll jump right into dollar yen for you, Gary. Here's what the British pound looks like. I do need to bring this up at this point just because we have all that event risk on tap. Here's what the British pound looked like yesterday. You know, it's a variable when you come into these types of event risk because there's really no expectation. It's really how the market interprets her commentary. I read it as a very cautionary approach, really extending a hand, but at the same time being kind of firm, like this is what we've decided, yada, yada. I don't want to get into it. I sent over the link if you guys want to read it, but markets, you know, are taking it in stride. Pretty much this is more or less what we expected. Looking at pound price action, here's what the daily chart looks like. I do think you risk a little bit more of a spill lower. You know, we kind of found support perfectly at the monthly open, which is what you want to see. The only thing I didn't like is I kind of was looking for a drop into this zone. Maybe I'm being a little bit too particular, and it is the British pound, so I shouldn't get too picky, but I think one more low might do it into this sweet butter spot. Okay, you got 123.45, 123.60. 50% retracement of the advance off the lows, nice swing lows from back here in February, former trendline resistance. This is a 3-point touch, 1, 2, 3 before the break. Tagged as support, you know, maybe one last tag. All of those converge down here into the close of the month at 23.45, 23.60. So that's sort of where I'd be a little bit more interested in trying to see if I could fade the losses. Momentum still hasn't turned around either, so you just want to be cautious about trying to get too aggressive on the longs just yet. I know that we were looking for this to be sort of initial support last night, but still, just based on what we're seeing here in price action with the dollar index, maybe a little bit more upside, sterling, maybe a little bit more downside near term before you finally make a little bit more of a base and launch higher. Still like the broader upside of pound, any way you slice it. In fact, if we take a parallel off this, let's see if this does anything. Maybe something to keep an eye out. Largely speaking, again, if we just take a look at this chart, guys, and highlight the red trend lines, this is just in a simple consolidation off the Brexit low. Or, excuse me, this is the October lows here, post-Brexit low. So certainly you're just coming from the range highs. You're pretty much reaching the median of this year's range, right, as you can see. But see if we can't get some basing here. Largely speaking, do like the pound on the upside. Euro Oz, Pooja, it is on the list, 100%. We'll get to that. First up, any other questions on the pound? Keep an eye on it today. You're going to continue to see the markets react to the Article 50 declaration. Broadly speaking, looking for a new low to get long near 23.45, 23.60. Dollar yen, number 4. Here's what the abomination looks like, Gary. And it's interesting because we were looking for this trade. Here's what the update looked like last night. But we were looking at this trade, earlier in the week, talking about the fact that, we had some ongoing bullish divergence. We were looking for this pop higher last week. We opened this week with a gap lower. But, it's dollar yen. And that's why I titled it The Burn and Turn. That's basically what it does. It burns everyone who's been trying to find the base, just runs through the stops, and then just turns and rips, or vice versa. It's just, very dollar yen classical moves. So with that being said, taking a look at yesterday's update, this thing was coming right back into near-term resistance. That's still holding, 1145. 1120. We talked about it here in the webinar for a while yesterday. That's kind of the zone that we would need to get to shift the focus back for a recovery in dollar yen, targeting 112.57, targeting this median line right here. So we didn't get it. We got the rallying to resistance, and it's held as resistance, whereby giving us a pretty decent key range to work with of about 100 pips, 110.10 into 111.40, 120 pips or so. But that's still the major focus for me. I like the rebound, taking this a little bit higher. And I actually like the idea of near-term yen weakness on some other crosses as well. But point being, here's what dollar yen looks like now. Okay, this was constituted a break of the weekly open and weekly opening range highs. So technically, it would shift our focus higher. The pullback finding some support here at the former range lows. Starting to become a little bit more of a constructive stair step, but you would still need to clear 111.45 to get this thing going. Okay, so no change as far as the game plan or the levels. I just kind of wanted to update you on where we were in price. But still looking for a possible rebound here, Mike. Yen is very strong today due to the uncertainty of Brexit. Yeah, I mean, you could say that, but I mean, here's the relative performance, right? Aussie's up just as much, about 0.22% on the session. Both of them doing pretty well. And yeah, I wouldn't say that's necessarily uncertainty, Mike. You know what I mean? If we take a look at broader risk assets, well, Europe is not really trading heavy. So I wouldn't say there's uncertainty there. In fact, CAC 40 is up 0.21. FTSE is, obviously the UK economy will be a little bit soft on a day like today just because of that. But broader markets are really taking this in stride. If we take a look at equity fund futures, or excuse me, U.S. equity futures, we're poised to close higher on this session or to start the session higher too. Of course, this can change in a heartbeat as we saw yesterday, but you see what I mean. So don't correlate the two just too strongly just yet. Looking to see if we can find a little bit more of a base jump here in dollar yen. Questions? Going once. He says, I guess we could have had a much stronger reaction, right, Mike? Yeah, I agree, Michael. I think we could have gotten, with things like this, as I said earlier in session, I don't have any expectations. I just want to be in front of my terminal. We didn't even know the exact time this was all gonna go down. So I just kind of wanted to see what was going to happen with the actual details of the letter, what it entails. It's really kind of a rosy, hey, we need to work together and all this. I didn't really see anything in there that should really shake up markets or anything that was unforeseen, Okay, I digress. Dollar yen, Aussie yen, we'll do that as number 5. Another very interesting cross with the yen. Okay, here is what we're looking at. So the one thing I just wanted to note about this is yesterday you made an outside daily reversal off support, just shy of support. I know Jamie was looking at a different slope, but basically just missed it as well, as did we. So here's what we're looking at. Well, let me take you back to the daily chart first, because we haven't really covered Aussie yen here in the charts, here in the intraday webinars for a while. Taking it back to the weekly chart, for those of you who also follow us on Daily FX, this is a chart I published at the start of the year, and this was my personal trade of the year. Aussie yen has been for the last, I think, 2 years, and we shifted it to more of a long bias heading into the start of this year based on what we saw last year. It came right into a major key support zone that we were watching since early 2015. That level held, really strong reaction to the start. 1, 2, 3, 4, 5 has us now thinking you might see a little bit more of recovery, but the broader picture remains constructive. Okay, specifically while above the 82 level, 81.50. So that's sort of where we are now. You have a little bit more of a risk for a downside move near term. Broader picture, you're basically still working in the assumption of the breakout that we made last year. Taking it to a daily chart, okay, it has some structure to the decline that's been very, very clean. It highlights some interesting levels on the immediate term, 85.43 into 85.34. You have the 100-day moving average, which has been a very nice, decent pivot in price. You have the median line off the highs, former swing lows, and a 618 retracement. This is still in play because we haven't violated the low yet. So it is still the 618 retracement of this range. All of that converges right here. And you can see yesterday we turned right from support, and in the process, posting an outside day reversal off the lows, typically a bullish thing, right? So I think you could still probe a little bit higher near 85.40, but ultimately the risk is for that last stab lower, and 83 would be like a heartbeat. I would definitely be looking for a long position or some sort of exhaustion on a dip into that region. So here's what the intraday chart looks like, and this is really where most of the focus is. And here's what we looked like last night. On Aussie yen. So from here, let me bring this back into something a little bit more near term. Be looking for the pullback. 84.40. Well, first of all, the weekly open right here is the first area of support that you would look for. But if this is a raised floor or a lowered yeah, raised floor, then the breach above this region, which is our near-term bearish invalidation level, the median line, would beg a rally back towards basically 85.50, the median line here, which is a very nice pivot in price as well. Still, on a rally near that region, I would still be looking for possible entry on the short side. But for now, breach above the weekly open, a breach above the weekly opening range high, coming back, testing it as support. If this holds into the U.S. Open, you continue to favor the long side. I just don't want to be long into 85.20. Once that breaks, cool. But it's been a pretty big pivot in price, and I do want to just respect this key near-term resistance. So expect a little bit more kickback. Stay constructive above 84.40. Look for that breach higher for 85.50 tag, but ultimately we're looking for the rally into these median lines to sell. Questions on Aussie yen. Coming up next for you, Pooja, is Euro Aus. This will be number 5, number 6. So where are we on Euro Aus? Here's what it looked like last night. Oh, okay, so we just hit 140.55 right now. Okay, momentum's in pretty oversold territory. So here's what we want to see on Euro Aus. Again, this was actually the cleanest trade. Here's what it looked like to the start of the week. I know, Pooja, we've been following this, right? So I don't need to go back and keep doing this. But we started the week coming into a near-term resistance, the 143 handle. You had a sliding parallel extending there. You had the 618 retracement. You had the 2016 low day close. Huge confluence region. Tested it twice. This break that we made right here invalidates or breaks or signifies a break of the weekly open, a break of the weekly opening range lows, and certainly shifts the focus to the downside with momentum really breaking below 50 and even the 40 level for the first time in a couple of weeks. So here's, well, let me go back to that. Here's what it looked like last night. And we cited that initial target at 140.55, which is a simple swing high, but it also converges on the actual median line. And the reason, as we said, the reason you still want to leave these median lines on is because you could see it still offers some help. Even though we broke the upper bounds, that slope of those highs was still the same gradient. So whenever that happens, I tend to leave them on and kind of stick with them for a while. And you can see, again, the median line offering some support here. Now, let's clean this up. This is a 50%. We'll leave that 50 also. That's the opening range lows for the week. Levels remain unchanged on this. Don't see much divergence just yet. Okay, so on the near-term charts, you're starting to get a little bit more divergence. Really in way oversold territory, so I don't necessarily want to act on that here. Stronger divergence on the 10-minute. But even those are all still in oversold territory. So I don't think it's ready to be faded just yet, Pooja. Maybe a little low. Yeah, he took the words out of my mouth. Yeah, maybe a little lower first. Look for that more market turn in momentum. If this was a divergent signal right here, that would be perfect. Especially when they come into confluence regions like that. I love to see that. But it's just not there just yet. So we'll see what the U.S. Open looks like. I would be looking to find just a little bit of a fade on this one. Remember the ATR on it, so don't go nuts with it. But ultimately, it's important to note that we've made a break of the weekly opening range and the weekly open. So definitely the risk still remains lower. If anything, I'd be looking to fade this for a little pop higher. Here's the daily chart looks like. I guess at this point, you can clean this up a bit. Go a little bit more basic as far as your basic trendline support. Doop-a-doo. You know what? I'd keep 140 in view too. 140.15. Not only is it that high, but you can actually see some former swing lows not too far off that mark as well. And again, based on time, over the next few days, that converges on basic trendline support. So something to keep in mind there, Pooja. But yeah, I think you risk a little bit more of a slide lower here before it recovers. A pop into what level? So on a rebound, good question. On a rebound, okay, bear with me one sec. It's going to get messy. I just want to see what this looks like. It's too early to even rely on this, but a lot of times, just kind of gauging where median line resistance may be gives you a decent play on where we should be looking. So if this is a decent confluence area, and obviously if we look at this median line pitchfork that I just threw on here, the median line does actually converge on this same region, further highlighting the risk for a near-term recovery off that mark. So do keep that in mind heading into the US Open. But I would be looking for the 50 line as a decent entry or a decent target on a rebound higher. If we take into account the weekly opening range low, that's a little high for that. But Pooja, once you make that rebound, tack on a quick retracement and see what fib converges on this. That's sort of what my first initial inclination would be on a rebound here in Euro-Oz. Does that make sense? Pooja says, okay, thanks. Yeah, you're more than welcome. And also keep in mind in this 120-minute chart, we're making an outside reversal, 2-hour candle at support. A lot of times, as we always say, these outside candle reversals when they're at the highs can be great when they're a reversal to the downside. When it's a reversal to the downside at the lows, a lot of times this will suggest that you're actually seeing exhaustion. So I'll be watching this one exceptionally close heading into the U.S. trade session. It's a good way to be able to kind of keep out of the dollar if you're not trying to get any dollar exposure. But it's been a decent play, certainly right into initial support. Questions on Euro-Oz? Going once, going twice, sold. Aussie Kiwi number 7. Just a quick touch on that. We've been following Aussie Kiwi since earlier in the week. Big turnaround. That's not what I wanted. Dun, dun, dun. Here it is. So Aussie Kiwi plowed through the weekly open. Median line that we were looking at yesterday came right into resistance. Here's what Aussie Kiwi looks like right now. And here we are with the pullback. So look, I just want to take the daily chart first. This is still a big region. This is still a big region. I'm no longer really interested in long side Aussie Kiwi exposure, although I do think inevitably you're going to see this thing just insanely rally. Pooja says, okay, thanks again. Nice profits yesterday. Well done, Pooja. I'm just helping you find the levels. You're the one doing the trading. So cheers on that. As far as Aussie Kiwi is concerned, really nice play to the upside. Like I said, with the break of the weekly opening range high, clearly giving you an upside bias. First target's that parallel. Second target was 109.15. And as I said, this is still the mark for me. I'm no longer interested in long side exposure on Aussie Key. If we close above this region, fine. 109.70, go for it, right? That's this region right here, okay, which is the swing lows from previously last year. Also, you have the median line right off the lows. So the levels are pretty clear for me. I'm not really interested in long side exposure unless you see some sort of really conviction break and close above that 109.15 region. Okay, as far as support's concerned, you'd look for initial support at former trendline resistance, which is what we're kind of getting here. But really, this is the zone that you put you back on the short side. And it needs to be a break below 108.50. Again, for the record, I don't really like being long Kiwi. It's not my thing. I don't know what's going on with Kiwi dollar. If you notice, I haven't really been highlighting it on the intraday charts for some time. We've been in a chop zone here. We've continued to favor the short side below 71.30, but that hasn't done much for you. Let me take it back. On the intraday basis, yeah, the short side has been the way to play this on any type of material rally. But even that, it's a trade that you're going to sit in for hours before you get any juice. So, I don't really know what to do with this on the Kiwi versus the dollar. So with that being said, the bearish buy sub 71.30 still is held constant. Means you could get another 100 pip rally in Kiwi. Means for Aussie Kiwi, you could see that real strong pullback into basic trendline support, the weekly open, before you see this thing rip again. So that's my hesitation on Aussie Key. Levels remain unchanged. You're basically looking for that possible pullback near 108.40. A breach above and a close above 109.14 certainly shifts the focus for me more dramatically to the upside. Any questions on Aussie Key? Pretty clear-cut play yesterday with that breach above the weekly open. So glad some of you caught that one. I do want to take a quick segue into the euro crosses. Here's number 8 is euro dollar heading into the U.S. trade session. Look, swing trades got stopped out in profit on this trade. Really, for me, what we talked about yesterday in the webinar, guys, kind of was a perfect game plan earlier in the week. I think it was Monday or Tuesday. A break below the weekly open shifted things to the downside, and really it was the push below 108.20. That was the level. And not only that, as I said in the webinar, it had to be a close, and we got it. Right? So you got to trust the levels. You got to trust the levels. And if you're ever sort of wondering the merits of our technical approach, yesterday was a perfect example. Here's the reversal candle. We talked about this critical zone of resistance. Here was the close below 108.20, even 108.16, which is, again, a swing low from back here in 2016, early 2016. And then that turns that region into immediate resistance. As long as we stay below that, you look lower. Here's what the euro looked like yesterday in intraday. Okay, you pushed below it into the U.S. trade, close of U.S. trade. Asia opens, you try to press into it as resistance, instant resistance, and then a continuation lower. So objectively, that was a break of the weekly open, a break of the weekly opening range lows, and a test of the opening range lows as resistance before moving lower. Textbook. So really beautiful move here on the euro. I do think you look to inevitably buy this trade. We're still constructive on the euro from a longer term stance, but certainly this is the first oversold reading that you've gotten since back here. And this was at the end of that recent down move. Okay, so certainly at this point, I do want to be cautious. This is at the highs. You could see this actually be marking a little bit more of an approach for a correction down lower in the euro. I do think you get it. So below 108.20, the risk is for a move lower into 107.14. 107 would be a nice zone. You'd start to look for initial support, 50% retracement, nice pivot in price. Okay, going all the way back there, right? And all that kind of surmounts right around that 107 handle. So risk for a little bit move, risk for a move lower. Geez, try and saying that 4 times in euro, but it's specifically heading into the U.S. trade session right now. I wouldn't be looking to press a short into 107.50. Look for a little bit of a rebound for entries here. Possibly 107. If you get 108, I don't think you quite get that high, but if you get it, I think that might be a decent area. Looking for a drop into this. I guess we should mark it up at this point. Into this zone. Also keep in mind, that's the 50 line. See that faint blue line? Also converges on this region. Questions on euro dollar. Finally, some cleanliness on the price action. And it's interesting that we get this kind of price action heading into the close of the month, a time where we're typically much lighter on leverage, typically much more nimble. You're getting a little bit more clear, definitive weekly opening range breaks here. Questions? Looking for exhaustion into 107.14 for euro longs. Euro Oz longs? Yeah. Oh, for euro dollar longs? This would be the first area of support, like I said, I would be looking for. If you're talking about euro dollar, oh yeah, I'm not sure why I was looking at euro Oz here on the chart, on the on the feed. Yeah, that's an area of which I would start to look for initial support. Absolutely. The one caveat I would say, Pooja, is that in time, if we're looking at slope, this actually points out to me as a more critical area, 106.50. Just because we've seen price react to that region in slope already. If you remember, I don't have any parallels drawn here, but let me draw one. I did have one on here earlier in the week that I removed. Okay, off this high. And you got one tag, kind of a run through, tag, tag. That converges on 107 into 107.15 too. I kind of removed it because we've sailed through it on this, on the upside, and both times on the upside. On the downside, you saw a little blip here before you broke, right? This is getting real nitty-gritty in price action, guys. But I notice these kinds of things, and if you pay attention to them, a lot of times they can be really nice plays and help you get these really nice pivots in price. So you notice that on the way up, you sail through both times. But on the way down, there's support, support, break, resistance, resistance, move lower. So I would be more prone to pay attention to this slope or this gradient as support more so than the resistance at this point. So that highlights this region. Just lower, like I said, the last one that really gave us the more definitive turn in price takes you into 106.50. So either way, both of these areas of interest for exhaustion, long entries, I would mark this one right now as my bullish invalidation. So as long as you stay above 106.50, I like the long side for euro. Make sense? Questions, guys? Okay. Next up on tap is euro yen, number 9. Euro yen, euro yen. Okay, another one where you made a very objective and simple break of the weekly opening range and the weekly open, which you've been pivoting at. It was really this move here into key support. We talked about this yesterday in the webinar that even if you saw that downside break, I'd be very, very reluctant to do anything past 119.26 until you get through this on a closed basis. So I still think the same exact thing. You got a break of the weekly opening range, great. Shifts the focus to the downside, great. You're below that support structure right now, you'd need to see the close. Keep in mind a few things. You're basically unchanged on the month, okay? This is the monthly open, literally, like right here. This is also a longer dated 618 extension from the decline off of last December's high. And just below that, obviously, we've been talking about this slope, basic parallel, extending off the highs, kind of messy, but you caught the lows. That's right here in this region as well. Okay, so I would definitely be very cautious on trying to get an aggressive downside play here in Euro Yen. You did have an outside day yesterday. It was not a reversal, outside reversal, but it was an outside day. So or today so far, excuse me, all of today's price action has encompassed the previous 4 days price. So that is an outsized day that you want to pay attention to. That being said, I would still need to see a close below this region to continue favoring the downside in Euro Yen. 118.76, 118.40 are initial downside targets. Key resistance at this point, I'd be pretty comfortable dropping that down into 120.68 from 121. So quick update on that Euro Yen chart from earlier in the week. No change to any of those levels. Although, now that we've made a new low, you kind of want to don't stress this retracement. We'll highlight that low. Keeps the same focus. Questions on Euro Yen. Number 9. All right. Quick segue into some of the commodities. Okay, we have gold, we have crude that we've been following exceptionally close, both of which are reacting to some near-term levels. You know, I hate to toot the horn, but for crude, there it is, 47. You know, we put a tweet out a couple of weeks ago saying that this thing is vulnerable for rebounds above 47, and certainly every time this thing has approached the figure, 47.16 specifically being the 618 retracement, you've seen some pretty outsized, decent rebounds. This rebound, specifically what we just made this week, is coming into a little bit more of a critical region. Okay, on the near term. And that's defined basically by this current near-term slope that we've been following off the highs. You can see that the gradient has offered some very nice resistance. You know, the median line converges on the longer dated 50% retracement of that advance. And we turned just ahead of that on the last stab. Here it is again. Momentum. Technically, it's not divergence, guys, because there is a slightly hair higher high here. But certainly for me, this is still something I'd be noting as a waning momentum signature. Okay, inability to break above the 70 threshold is not something you'd want to see in an uptrend. So I'd be cautious on crude prices near term. Certainly, if the dollar has a little bit more strength in it, dollar strength should also curb the upside in some of these commodity rallies. So my long story short, guys, you know, look for a little bit more of a pullback. Interim support at this point, this is your spot right here. Okay, why? It's the initial weekly opening range highs. I gotta move that over. It's your initial weekly opening range highs. It's the weekly open, and it's a key 618 retracement of a range of which the market has still continued to respect. We're still within this range, right? We haven't made a new low. We haven't made a new high. Got to respect that 618. Converges on the weekly open, and slope resistance, former slope resistance, already offered support. All of that converges right here. So we're going to go ahead and bring that up from 47 to 48. Gives you another dollar to the upside. 48 into 48.12 is going to be our near-term support and bullish invalidation. As long as we stay above that, you have to respect bounces in crude prices. Okay, if we break back below this region, that'll change the picture for what's going on here in the crude price. And certainly if the dollar really rips, that would be your indication, in my humble opinion, a break below 48, that crude is about to fall, a little bit harder. Until we do, 48 support. And we're going to continue to favor the upside well above that region. Questions on crude prices? Again, inventory is out at 10:30 Eastern, shortly after, about an hour after we close out this webinar. Vladimir wants to take, Mike, I see your question here. I was reading it earlier. So Mike is asking a question I'm sure a lot of you have had. He's saying, I would love to see a webinar with you managing a live trade and see what you do think and look while in a trade. Would you run a webinar doing that one day, please? It's something I've thought about and I've gotten a lot of questions about. Mike, my only concern is I don't want to mess with my personal trading because, trading is a difficult enough task, guys. I'm not going to make believe that, I could just put this on a live broadcast and go through my trades as I normally would. Obviously, having someone looking over your shoulder is always going to impact you. So I want to try to keep this as objective as I can when I do these webinars, and that's why I try to keep my own personal trades out. Secondly, guys, there's no way, anyone, whether you're Jamie Setley or Michael Boutros, can effectively trade all of these pairs at the same time. I put these out here for you based on your, you can pick and choose which one of these setups, if any, that you want to play on. A lot of them I try to cover all the time zones. So whether you're in Australia, the UK, or anywhere in Europe or here in the United States, there's something on the menu for you. But just to give you kind of an idea, Mike says demo only. Oh, Mike, come on. Who spends this at this late in the game? For me, demo trading is just like complete waste of time. But anyway, it's something we'll think about, Mike, and I'll try to keep you abreast as much as I can. Vlad says possible to break a test of 47. Look, let me take a step back, Vlad. Yeah, it could definitely test 47. Vlad, keep your eye on this. Take a picture of this chart if you don't have it. Okay, this is the crude chart that we've been following for months, maybe even years. Okay, on a weekly basis, it's really a close below 48. We haven't even gotten that. Okay, the closest we got was last week. That close was just below. It was at 48.10. Okay, just 6 cents underneath that 236. But the point is, don't stress the 236. Stress this. You have this median line for a formation we've been following for nearly 2 years. Upper parallel caught the highs. Median line to that 50 line comes in dead in with the 52-week moving average, another moving average which has offered a very nice pivot in price. So we've been talking about the fact that, yeah, you could see a little bit of a bounce, but at the end of the day, what I wanted to highlight here for you, Vlad, is I think you look lower in crude prices on the longer term. This was a break of the yearly opening range. So inherently, that kind of outlook, objective price action, analysis would tell you that you would look for a later in the year type of low, type of play. So with that being said, yeah, I think you're going to see 47 break at some point eventually. But at this point, you need to respect this near-term support. If 48 breaks on a downside, yeah, you have a full dollar range to play. But even then, I'd be very cautious on a drop into that zone. Okay, that's really sort of the level to beat. And you can see every time that we've approached it, the reaction that the market has is plenty of buyers. And in fact, off of this level, another thing that you want to pay attention to, this is the first time that a rally off that mark has preceded or topped or surpassed previous highs. So for example, the first time we came into 47 in early March, the rally failed ahead of the previous rally. The second time we came into 47 last week, the rally failed ahead of the previous rally. This is the first time where the rally off that mark has surpassed the previous high. So change in behavior, right? Something to kind of shift the tide, right? You want to pay attention to these things. So that's one thing I just want to pay attention to, guys, and bring to your attention. 48 isn't the line in the sand for me right now, Vlad. If we break below 48, I do think you rush 47, but I wouldn't want to necessarily be thinking that you'll see all that strong reaction there. If the 48 level breaks here, 47 could just be a target as opposed to an entry for a long position. Do you see the difference of how I'm thinking about it? Does that make sense? Pooja says, seeing you manage a live trade would be wonderful. I know it's very difficult, but would be great for learning for us. Gotcha, Pooja. And guys, I listened to your requests, and definitely it's not the first time it's come up, so it's something I will be considering. Mike says, I got that question. Thanks. Vladimir says, thanks. Yeah, I gotcha. You're more than welcome. Also wanted to look at silver and copper. Silver, I'm not sure what's wrong with the chart on TradingView, guys. They have a couple of bad ticks, which really mess this thing up. So if you bear with me, I can get it up, but the intraday chart is all jacked. I was trying to look at this earlier. Okay. Oops. So yeah, you could see there was a couple of bad ticks here early in the week. I noticed it at the open, so don't mind those high bars there. But for silver, the one thing I did want to note is that you're coming into resistance, and this is a little bit off the slope that we've been following. So remember, we were following these major slopes. If you take a basic trendline resistance just off the high from August, and then the subsequent high that you made in February of this year, that puts you basically where you are right now, okay? Another one that, made a nice move into resistance has been following this median line formation like no one's business. I keep messing my lines up. Hold on. So let's clean this up just a tad. Don't need that. That's your key support at this point. That target's out. This target, still leave it. Still leave it in this key zone here, guys. This is still, get rid of that 88.6. Don't need that. Keep that extension. And that's a retracement off the high. The one thing I would want to just take a look at real quick, Vlad, is this. I want to see if this extension offers anything. Hmm. 618 puts it back at 1860. Okay. So yeah, key focus range, okay? 1836 into the 1764. This region here is the major focus right now. Okay, this is a big Fibonacci confluence, but aside from that, you also have the highs. And right now, it would necessitate a break of this trend line, which has multiple touches. It's a 3-point trend line. Remember, I always count that as something important for me, because any 2 points can make a trend line, right? That third point is really what confirms it. We have 3 touches, including the touch high from August of last year. And you can see price action struggling there this week. So right now, heading into the U.S. trade session, you are at resistance, plain and simple. And that makes sense if you do see the dollar rally a little bit. A break back below the May high at 18 would trigger, in my mind, a little bit of a pullback near 1780 and back again near 1764. Interestingly enough, this is the weekly open. So basically, if you're looking for a return into the weekly open, recall that you don't really have an opening range break here for the week. Your Monday, Tuesday stretch just made a high. We haven't come to test the lows yet. So I do think that the risk in your term is for a pullback well below 1836, 1840 here. Vlad, does that help? Copper, do not ask me. Copper, I would say, again, if you put a gun to my head, I'd want to be short just against the weekly open, or excuse me, just against the upper parallel here. which comes in really nice with last week's open. That's like right here. But I've just don't have a feel for this thing. I really didn't think the rally off of 260 was going to be quite this strong. If anything, I would have wanted to see this hold like right here. So copper is a little bit, a little bit tricky for me here. Again, if you put a gun to my head, I would say bearish sub 270, but you know, the nature of the advance that you just saw is not something I want to, you know, necessarily try to fade just yet. So if anything, yeah, I would say if it put a gun to my head, I would say maybe short sub 270, but that's it. It's the only conviction I would have on this. Because unlike you know, silver, this actually did make a break of a weekly opening range. Here's your weekly open. Let me just bring that up for you. You know, you open the week, yeah, you kind of gapped a little bit, you filled the gap, you move into a new low, which is that structural support, you come right into the back into the open of the week. That would constitute a near-term opening range for me, and then there's the break. So that would technically keep you constructive above 260, but near term, you're still in the confines of this descending median line formation, which actually has offered some decent pivots in price. And that would suggest that you want to use some caution here, sub 270. Make sense? Vlad says, yes, thanks, gotcha. Or thanks, exactly helps. Right on, Vlad. I appreciate that. Okay. Again, quick reminder, crude inventories at 10:30. Any other questions or trade setups, guys, feel free to throw them on the message board. Otherwise, we'll wrap it up until tomorrow morning. And tomorrow we'll kind of keep it brief, guys. I'm not one who's going to be putting on any new trades probably into the close of Thursday. I just don't even want to mess it up. I've had a great quarter, and I don't want to kind of mess that up into the close. Things are likely to get pretty slippery as we head into the end of the week, month, quarter. Lighten your load as far as the trade size per scalp, and we will pick things up tomorrow. Hopefully a little bit more clarity on some of these commodities, but those dollar crosses have been pretty nice. So watch this rebound A in the dollar yen. I do want to see if we clear 111.45. Sterling, same thing. And as far as the crosses, the Aussie yen is one of the ones that we'll be really focused on to see if that resistance rebound actually does hold. All right, guys. I'll see you tomorrow morning. Best of luck trading, and we'll see you then. Cheers.